Afternoon, folks. Hope you're doing well. I'm sure you're wondering, how to do it again? Let's break it down. So looking at the message here this morning, it is NFP Thursday, keeping things very light. And then at 9:45, confirming to the community that this is great price action to tape read and build experience. It's much more productive than blowing accounts. Trust me on this one. Those are zero trades. Very hype. Let's go into why. The first thing we always want to start with is our economic calendar, right? If you're not looking at the economic calendar, you're completely out of the know. So what do we see as the main event this week, right? It's Friday. We have non-farm payroll at 8:30. So the day that precedes non-farm payroll are any of the three major high impact news drivers: CPI, FOMC, and non-farm payroll. The day before those high impact news drivers will generally be very low probability. And this is something that myself and my analysts are able to anticipate from before the week, right? So this is something that's published. This is our newsletter. It's free for those that want to sign up in our website. We're able to anticipate this before the week using what? The economic calendar. So Thursday, heightened market volatility is expected at 8:30, driven by high impact news release during the AM session. As the day that precedes the non-farm payroll report, price is expected to deliver within the context of high resistance, low probability trading. Traders should approach the market with caution, acknowledging it is at a lower probability day, particularly for those with limited experience. So what's that saying? It's expected to be high resistance and low probability. And it's going to be especially difficult for those with limited experience. Is it to say nobody can take trades, nobody can be profitable on this day? Absolutely not. But it is to recommend and guide newer traders, developing traders, that this day will likely be very difficult for you if you haven't been profitable for several years. So now, with that in mind, now we go into the price charts. So let's take a look at the AM session. Here we have 9:30 to 11:30. Looking at this price action here, very sloppy, lots of back and forth, deep retracements, and missing a lot of the precision elements that I'm able to show you guys in my live trading when the markets are cleaner and moving with more structure and symmetry, right? So this is able to be anticipated using the economic calendar. But now, what other signatures told me it was going to be low probability when I get to the session? Number one, look at the size of the regular trading hours gap from where we closed the previous day to where we opened here at 9:30, only a 15-point gap. When the economic calendar tells me it's low probability, and we have a small gap, and what else do we get? Do you see a lot of inefficiencies in this price action? We don't get our first inefficiency till 9:49, 19 minutes into market open. So what that's indicating is the market's not in a hurry to go anywhere. And then the inefficiency that it does form, we see what? It's spending a lot of time inside that imbalance. Again, meaning it's not in a hurry to go anywhere. So when you start having all these factors aligning, you can see why it's easy to predict why this day is going to be sloppy, low probability, and why it's better not to roast your account on these days and wait for cleaner trading days. However, going off electronic trading, we can still see the markets doing the same things, right? Let's start from the 15-minute time frame. Zooming into today's price action. Here we have midnight open, very important time of day. Here we have buy side liquidity, right? This is the previous day's high. At 9:30, the market runs higher first into the buy stops, previous day's high. Very important to study what 9:30 does, because that's going to give you insight for the AM session. So we see 9:30 runs higher first, very important. Where are the lows smooth and obvious for retail to place their stop loss? Well, here we can see these smooth lows here. And what else makes these lows more significant? The fact that it's London lows, right? It's forming within 2 a.m. to 5 a.m. So the market's still doing the same things. It's doing a Judas swing at 9:30, which is just the faked run, the manipulation run. And then it's running to the other side of the range to attack opposing liquidity to offset distribute at the London lows, especially when they're smooth. That's a very strong drawn liquidity. Am I able to see these price runs? Absolutely. Right? But when am I not willing to trade price runs that I'm able to see? And it's on days like this. When we look at the 5-minute chart, right? Yes, it's still doing the same things. Manipulation at 9:30, runs higher into the previous day's high, and then it breaks down into pre-market lows here, and then eventually the London lows down here. Market's still doing the same things, right? The algorithm's not taking a day off, but I'm not willing to trade these days because of the high resistance liquidity run. I like to trade days that are low resistance, where I get in, the market runs to targets quickly, and that's my preferred style of trading. By doing that, I'm also able to keep my edge sharp. What does that mean? Well, how do you dull a blade? How do you dull something that's sharp? You cut it on everything you see, and you use it carelessly. And what that will end up doing is dulling your edge to a point to where it's not sharp anymore. The way I keep my edge sharp is by focusing on cleaner, higher probability days, and this is not it for my trading in my specific models. So with that in mind, this is how you could have anticipated, predicted, and avoided this day altogether. Or if you are trading high resistance, it's absolutely tradable, but you absolutely have to know what you're doing. You can't rush the stop loss. You can't be in a hurry to pyramid, take aggressive bets with high leverage. You have to know how to manage your expectations on these days. If you do, choose to trade them. Thanks for watching. Hope this one was insightful, and keep in mind for the next high resistance day, protect your equity by either not trading at all, reducing risk, reducing trade frequency, or if you are going to trade it, make sure your expectations are managed accordingly. See you on the next one.